Hey everybody, it's Brian Shannon here from AlphaTrends.net. Today is Friday. It's the 23rd of November 2018, and we had a half a day here today. That didn't stop the sellers from continuing what they've been doing this week. And we saw for the week oil down 10%. Of course, that brings the energy names down as well. They were down 5%. And bonds rose a little bit, but pretty much across the board. It was selling of equities with the S&P losing close to 4%, the NASDAQ close to 5% low. Let's take a look at the damage here on the charts. This is a daily chart of the S&P 500. It goes back to early 17, and for some reason, I'm not sure why, but I drew this volume weighted average price in here a while back and realized that it was an important one to keep an eye on, and it continues to be an area where the buyers seem to be stepping in. I have no idea why that would be the case, but the point is that has been a level of support. Now, like any area of support, the more times it's tested, the more likely it is to fail. And I think that, given the descending nature of the 50, the 200-day moving average, the descending year-to-date volume-weighted average price, I'm still thinking that it's likely we'll see a test of the volume-weighted average price from the election. That would bring us down at this point right down to about 258-ish. So another 5 points away, and that would be, of course, only about 2%. But, the market is in a downtrend. I don't think you want to look to trust any bounces. As we know, in downtrends, we can get large bounces, and it sucks in people thinking that the trend has been changed. We had looked for the possibility of an inverted head and shoulders pattern. Let's look at a 65-minute chart for that. We had discussed this possibility, but we had no confirmation of that pattern forming. So in here, we were thinking maybe it was an inverted head and shoulders pattern, but we don't buy with a declining 5-day moving average. We don't trust the intermediate term rallies, so we never had a reason to get involved in there, and the market continued to fail, as you often see, of course, with a declining 5-day moving average. Now, looking just back to the last month or so, you can see we're below the volume weighted average price from the prior swing low, from this peak over here, and from this low of about a week and a half ago. So all of these volume weighted average prices are declining, indicating that money is moving out of this market, and it is not a prudent time to be looking for buyers, for places to purchase. That is, if we see a bounce, I think that the 270 area is likely to become a band of resistance for this market. We had prior support in there, and we have volume weighted average price levels from each of these swing highs and lows. And actually, if we put another one up over that, you can see it kind of tied right in as well. I'm going to change the color of that and the thickness just so we can see it with more clarity, that comes into that same exact level as well. So heading into next week, the theme remains continue to be cautious. We're below a declining 50 and 200-day moving average, below a 20-day moving average. We're in a downtrend, so prices are supposed to go lower. The sum of the declines is greater than the sum of the rallies in downtrends. You can make money on the rallies, but you've got to be quick and recognize when to move aside for those rallies. The NASDAQ has come down from 188 down to 160. So we've seen a pretty good decline in here, but the point is it continues to be negative. We're down 10% in 10 days, 11 days in the NASDAQ here since this little peak, and we're unable to really get any bounce at all. If you look at the volume, of course, today's a holiday shortened day, so don't pay too much attention to that. But looking at the weekly time frame here, the volume weighted average price from the election is right below us. Now, there's nothing saying this will become a level of support. We've been calling it a level of interest, and a level of interest has the potential to become a level of support. But if you look at what we have, maybe we come down a little bit through that, create another lower high, and then if the market were to get trapped below that volume weighted average price from the election, then perhaps we start to measure volume weighted average price levels from this low or from this spike low. The point is that right now we are in a downtrend. It's guilty until proven innocent. innocent. We cannot trust rally attempts. Let's look at the 30-minute chart in here, and we'll draw another volume weighted average price off that recent peak and this recent low. So you can see that we have a market still that is showing lower highs and lower lows. This prior band of support that some people were starting to look at as a potential double bottom has completely failed. A double bottom, keep in mind, is not identified until up in this area. Similar to all the way up, people were looking for double tops, and the double top was confirmed when it broke here. A double bottom would be confirmed above this level. So forget about that nonsense with doubles tops and double bottoms for now, because the path of least resistance is lower. As long as we have a declining 5-day moving average, don't trust the rally attempts. The Russell 2000 came up on Wednesday and again today, Friday, and found sellers right at the volume weighted average price from the low of last week, and that's also where we have the declining 5-day moving average. So we back it out to a daily time frame to get a bigger picture. We're still in a downtrend here. Now you look at it and say, is it the best short down here? Maybe it is, maybe it isn't, but the fact is it's not a double bottom either. It's more likely that the trend will continue lower in a way such as this. And in fact, the energy names that's exactly what I was telling subscribers, and I believe in last Friday's video as well, that no, this is not a double bottom here just because we have this low and this low. It would have to get above that high, and I was stating that I thought the more likely scenario was a rally and then further decline, and that's exactly what we have here. So going back to the Russell 2000, I think that's most likely as well. The path of least resistance is lower. We're hanging right on the volume weighted average price from the election, but the more important level, if we really give that up, is going to be the volume weighted average price from the 2016 low, which would bring us down under 140. So just because it's down a lot doesn't mean it can't continue further. Just because we're in a supposedly bullish seasonal period, as we were this week. Typically the week of Thanksgiving is a bullish period. Don't get stuck in those patterns of thinking that the market has to buy because they've been favorable in the past. Instead, look at the primary indicators of an intermediate term trend. Lower highs and lower lows with a declining 5-day moving average. Semiconductors held on a little bit better than the rest of the market this week. Actually, that's not true. They lost 3.5% for the week. So let's take a look at that daily time frame. And same thing is true here. Some people will likely be calling this a double bottom, but we have no indication that that is. As we've mentioned numerous times, the bigger level, again, we've been below the volume weighted average price from the election. The low from 2015 seems like the more likely next level to be tested rather than seeing upside. If we take all those off of there, what we have is a declining 10, 20, 30, and 40 week moving average. We have a market that broke an uptrend. It's turned sideways, it broke down, it's making lower highs and lower lows with a declining 10, 20, 30, 40 week moving average. It's in a bear market. Forget about the percentage of what people call a bear market. A bear market is a preponderance of sellers. The path of least resistance is lower. We're in a bearish environment. Whether it's officially in one or not means absolutely nothing. I've been saying that these biotechs are probably a waste of time in here, so I'm not really going to talk about those too much. Finally, the financials still, they came up into this prior band of support and looking like more lows are likely in this market as well. If we take a look at a couple of important VWAPs from below, we have tested this one already, and perhaps the next lower low comes in at about $24. As long as we have on this intermediate term time frame the lower highs and lower lows and a declining 5-day moving average, you have to look at this market as guilty till proven innocent and continue to be very cautious, not looking for pullback opportunities and trying to pick bottoms, because money continues to flow out of stocks.